Hey there, guys. Welcome back to another episode of Talk with Munster. I'm back again here with Angelo Christian. How's it going, Mr.
Hey,
Christian?
man. How are you? Good to see you.
Doing
How's
well.
everything? Good.
Doing well. I'm
Thank you.
doing well. Today we're going to be talking about how to prepare for a market crash. He's been in the industry for a very long time, so there's a lot of good advice. I thought it would be a great topic to go over. So for the viewers out there, Mr. Christian, what is a market crash?
Well, yeah, first off, I just want to give you guys a little bit. My name is Angelo Christian. One of the things that I do with Christian Financial is investment and wealth management. And, I'm glad that you called me to come on and talk about this today because I think it's a very important topic to actually talk about right now, especially with what's going on right now in the market. Okay, so today it's, November 14th, 2018. The market is very volatile. When you call my office, I thought it'd be a great opportunity to come and meet with you to express what we're doing. Like I manage a portfolio for myself and my clients, and we do a delta neutral portfolio. And a lot of people are passive investors or long investors. And right now the markets are very jittery. They're very volatile. The VIX index is very high right now. And if you don't know how to hedge against that, you could lose a lot of money in your retirement. And I certainly don't want that to happen to people, especially my clients or people out there that are watching this. So a lot of people that invest like in index funds or passive investments, they could really be exposed right now to a lot of volatility. I actually have a chart. I don't know if you can pull it up on the screen here. This chart right here is of the S&P index. And this is basically the barometer of the health of the economy, and the overall stock market is the S&P. And one of the things that you look at, one of my heroes I really look up to is Paul Tudor Jones. And one of the things he always says is that when the S&P falls below the 200-day moving average, there is, you should sell the market, and there could be a lot of downside ahead. Now, nobody knows what the future holds or what's going to happen in the future. But as you can see in this stock chart right here, the S&P is below the 200-day moving average. It closed today below the 200-day moving average, is staying below that for the last couple of weeks. Interest rates are on the rise, and that scares a lot of business for future investment. So I think that I can tell you what I do as a trader, as an active manager in my client's portfolio to help people to hedge against their portfolio and to help people with their retirement, because that's the big risk here. Is that what happened in 2008 was you had a lot of people that were exposed to the market long, and they lost their house, they lost their retirement, lost trillions of dollars, and they didn't know what to do. They panicked. And see, that's the problem with passive investment or long investment, is that there's no hedge, or you don't know how to hedge. You call your broker, you call your advisor, they don't know what to do. I was talking to a friend of mine, a very wealthy guy, that today's worth about $100 million. And anyway, and he just moved his money over to us because he had this same situation. His other broker that he actually was working with, he lost him $100,000, and he says, well, what about doing a hedge position with options or futures? He's like, I don't know anything about that. I don't know what any of that means. He was just buying stocks randomly, long shot 50-50 bets for the guy. And the thing is that you don't know what's going to happen when you buy a stock, right? So you need to know, whoever you invest your money with, you need to make sure that they know everything about the market, all the products, so that way you can pull from a large arsenal, a vast array of different products depending on what's happening in the market. Okay, you can't just know about buying stocks and be a great stock picker because you really don't know what's going to happen. All right, you don't know what's going to be the next Apple or what's going to be the next Kodak. Nobody knows that for sure. So, and right now, if your portfolio is long stocks and you see what's happening in the market right now with a lot of volatility, you could lose your retirement account if you're not careful. So the biggest thing that, does that help answer your question?
Yeah.
Okay.
Okay. So, just a lot of people don't understand what is a stock market. So what events can, occur when, the stock market's about to crash? What events cause it?
It could be various, obviously it's economic indicators. Like I said recently, the Federal Reserve has been on a tear raising interest rates, and that whenever rates usually rise, companies start to slow down with the amount of money they want to invest. Investors get a little bit skittish. If you look back, in history and the trends, usually when the Fed raises rates, typically the markets, they kind of get jittery and they kind of sell off. Nobody knows for sure if a recession is on the rise, if and when it's going to happen, or a depression. The biggest thing that I want to come out there and let everyone know is, how to prepare, how to hedge your portfolio in the event that there is a steep, acceleration to the downside, and how to protect your assets, because that's really what it's about, is, protecting your wealth for you and your family, right? And so you don't want to, let's say you have $1 million portfolio, and the market drops, 20%. Now your portfolio is worth $800,000. You're SOL, right? Well, there's ways, there's instruments, there's things that we use, that we employ at Christian Financial, on how to hedge against those type of things, so you don't lose 200,000 or 300 or half your wealth, right? So I think that is the most important thing. So, for what I would say is that if you guys are out there and you're listening, some of the things that you can definitely do right now, if you have a portfolio and you're trying to hedge against, the downside, and you don't have to do a complete hedge, but just a little bit of a hedge to your portfolio, is, either, you could look at selling calls in the market, which is a strategy. And you could do like an at the money call, sell calls in the market, like the SPY index, or the QQQ, which is the NASDAQ index. If you sell calls in that, if there is a little bit of a downside, that can help protect your portfolio if the market keeps going down further. So for example, what I mean by that is, let's say that the market drops another 20%, and you have $1 million account. Now your account's worth $800,000. But if you sold calls in the market, then instead of your account going down 200,000, maybe your account only goes down 70,000, because you have protection. It's kind of like insurance, right? Like if your house goes up in smoke, well, you have an insurance policy that will indemnify you. That's what selling a call is against, selling a call in the market is, versus having nothing to protect you. So having a long portfolio, like in stocks, for example, is kind of like owning a house with no insurance, because you don't know for sure what's going to happen, right? So do you own a house?
I do not.
Okay, do you own a car?
I do.
Would you drive a car without auto insurance?
No, absolutely not.
Because why?
Yeah, I mean, you just put yourself in a whole steep of trouble.
Right.
Yeah.
What would happen if you got in an accident?
I mean, I would have to, I would lose my vehicle.
Yeah.
I would have to probably be a lawsuit. Medical, hopefully that doesn't happen.
Right.
But yeah, there's just the whole trouble.
Right, and then that's the same analogy, is that if you have a long portfolio and you have no hedge against it, okay, and a lot of savvy traders, they already understand this. This message is for people out there that maybe you're in your retirement years, or whoever's managed your money, they have you long on bonds, or they have you just buying some random indexes. You need some type of hedge against there in the event that the market is selling. I mean, today the market closed, the NASDAQ closed down 2.5%. The S&P is down 1.5%. Like I said, nobody knows for sure what's going to happen in the future, but why not protect your portfolio in the event that there is another, recession or even a depression, right? So selling the calls, and then if you want to get real aggressive, another strategy is you can just sell futures. You can sell futures on the market, and the S&Ps or the NASDAQ to protect you. That's a lot bigger instrument, depending on how big your portfolio is. But that's another option that you can do. The thing about selling option calls is that you have a little bit. It's more of a dynamic delta as opposed to a static delta, and it protects you a little bit more. You have a little bit more room to play with. So, but those are some ways that, guys, if you have a portfolio, I guess the takeaway for your viewers is, if you have a portfolio and you're trying to protect your wealth, those are two great strategies that you can use to help to protect your assets, right? Because, and let's say that again, that you drop down 20 or 30%, well, you have that protection there to protect you on the downside in case there is further sell-off. So, and if you have a retirement account, you might want to call and ask. One of the questions I would say to your viewers and to you as well is, if you have a retirement account, you have an advisor, you need to call them and ask them, how are you protecting my assets in the event of a downturn? I mean, what is your hedge? What's your plan? And that was, like I said, my friend that he just moved his money over to us. When he called his advisor, his advisor didn't know what to tell him, right? He didn't know what to say to him, because he didn't have a plan. So that's kind of like you driving your car without auto insurance. He's like, I don't know if it goes down, you lose money. And he was down. Yeah, he was down $100,000 in his account. He's up with us already 16% in the last quarter.
Oh, that's awesome.
So even though you see the market's down, our actual portfolio is up for the year because of the way we manage the way we manage the account. You know.
What's the most common mistake that you see out of individuals before a market crash?
I would say there's a lot of things. The first thing is a lot of the instruments, they can give you a lot of leverage, and getting too big with your account with positions. If you are over leveraged, in other words, when they give you margin when you make certain trades, and it's kind of like you go into a buffet and you overeat and you stuff yourself. It's kind of like that type of thing with trading. So you don't want to overextend yourself and take on more than you can actually support in your account. Because then if you get forced with a margin call, you could have to liquidate. That happened to a lot of people in 2008. The other thing is that a lot of people, I think that they will trade and they don't fully understand what they're getting into, or the size of the instruments. Like a futures contract is massive, and you have to really understand that, and understanding the products, because if you don't understand the products, especially options, for example, then you could lose a lot of money. You could lose a lot of money, and so you just got to be really careful. Make sure that whoever you're working with, that they know exactly what they're. For example, like I put my own money in the fund. My own money's in there too. So I'm trading my money with my client's money. So that way I have all my money in there, their money's in there. It's not just their money, my skin is in the game. So a lot of advisors, they don't do that, right? Warren Buffett talks about this, that Wall Street's the only place where somebody will drive up in a Rolls Royce to take advice from somebody that took the subway to get there. So it's the only place in America. So so the thing is that you just want to make sure that you know what you're getting into if you decide to do it on your own. I think those are some of the biggest mistakes.
Okay. And so what should you do during market crash, or even after the aftermath of a market crash?
If there's a market crash, it's too late, because that's kind of like trying to buy insurance when your car's already crashed. You ain't gonna get it. Yeah. You're not gonna be able to get insurance when you're already in a car accident, right? So that's why I'm telling you right now, if you have a long portfolio, you need to have a hedge against that, guys. That's what I'm telling you. Because before there is, a crash, like I said, if you look at that chart that I showed earlier, we're sitting below the 200-day moving average. And again, nobody knows what's going to happen. Even Paul Tudor Jones, one of the greatest traders of all time, he doesn't know for sure what's going to happen. That was just something he said at one of the conferences I was at. But the thing is that you need to be proactive instead of reactive.
So what can you do right now today?
Well, that's what I was saying. That you need to call your advisor, and you need to ask them how they would protect or hedge against your portfolio in the event of a downturn. Or if you want to give me a call, I'd love to talk to you about managing your assets, your portfolio. You can reach me directly. All my contact information is below with my company, Angelo Christian, 832-431-6331. You can is my website going to be on there?
Yeah, absolutely.
Okay. So yeah, they can reach out to me. They can contact me. I'd love to talk to them. I can look at your account and see how exposed you are, to the market and the crash. That's the first thing is being aware of what you have, and then getting in front of it immediately to fix it.
Absolutely. Well, Angelo, I want to thank you for being here.
Yeah, absolutely, man. Thank you so much.
Please reach out to him if you have any other questions. All this information is going to be down in the link again. Appreciate it. Y'all take care. Please go check him out on YouTube at Angelo Christian Mortgage. Has plenty of content. So yeah, take care, guys. Have a good one.
Thank you.